Straight to the last read, where markets saw a pullback rally to snap a 4-day losing streak. The mid-caps, however, sulked in trade today. Now, after initial wild swings, the Nifty saw a sharp rally post-lunch to end just shy of that 10,700 mark, while the Sensex jumped about 360 points, led by gains of over 1%. Now, banks were sectoral outperformers today, and that index rallied almost 400 points, led by a 9% uptick in Kotak Mahindra Bank on the back of CNBC TV 18's news break. Mid-caps underperformed today. That index ended flat with a slight positive bias. Okay, from equity markets to the mutual funds then, it's a mixed bag when it comes to inflows in the month of November. So while inflows in the equity-linked scheme saw a drop of over 30%, liquid funds registered a sharp surge. Let's get in Surabhi Upadhyay for more details on this. Surabhi, give us your reading on, what really you make of these numbers.
Well, yes, the good news, as you're saying, is in liquid funds and money market funds, because this is where, because of the shakeout following the IL&FS defaults, there was a huge outflow that we saw in the previous month in October. Now that confidence is coming back and therefore those numbers are back in shape. But let me talk about equities. Now equities, it is a little muddling because you've seen a 33% drop in the total inflows coming into equity funds. And this we are taking by counting in the pure equity part as well as the ELSS part. Both of these categories have seen a slight decline. One might find it a little confusing because November was a great month for the market. The Nifty was up about 5%. Despite that, we've seen this cool off in flows. However, for me, the biggest silver lining is the fact that SIP flows are still very, very robust. In fact, at just less than 8,000 crores, that number has been steady. I mean, look at those bars in front of you, rock solid and steady. And that's telling you that the retail investor is not losing sleep. He or she has definitely come of age. So that's the real silver lining. Some of the other trends that stood out, balanced funds continue to see more and more outflows. The numbers have dwindled to just 200 crores this month in November, compared to about 500 odd crores in the month of October. That's nothing new. It's been the story of 2018 because of the fact that now dividends which were being paid out by these funds are taxable. So that as a category has started really declining. Just some industry feedback that we are getting. The November numbers have been a little tempered. The expectation is that the coming months also could feel the heat because the entire mutual fund distribution network is going through a major change with the SEBI mandate coming through that now the MF world has to move to a full trail model. That means your advisor cannot be paid by the mutual fund house the moment you decide to subscribe to a scheme. There's no upfront commission. It's all trail. As this new model is rolled out, there will be disruption and therefore we could see some more volatility in the flows. Mixed picture. SIP is really good, but yes, equity flows have dwindled a bit in November.
All right, Surabhi, thank you very much for joining in with that. Now, in the commodity space, crude oil prices remain subdued as investors await clarity on OPEC's decision regarding its production plan. Now, the meeting of the cartel is still underway in Vienna. CNBC's Hadley Gamble has been tracking that crucial event, and here's her report on the latest from that meeting.
As energy ministers are arriving as we speak, one of the questions going forward is going to be not just about the future of OPEC and its relevancy, but also, of course, what's going to happen with the Russians, because obviously this Saudi-Russia relationship that we've seen growing over the last several years may have hit a bit of a bump in the road here. You have to remember, of course, that the Russians, when it comes to keeping prices higher potentially or boosting them higher, of course they want to do that, but of course they also at the same time really don't want to be the ones to cut. So this relationship between Alexander Novak and Khalid Al-Fallah, the Saudi energy minister, is key to getting any kind of deal done. Let's listen into what the energy minister had to say to me yesterday.
We're not targeting prices, first of all. We have an objective that we hope to achieve, which is to bring supply-demand into balance and to achieve that gradually and gently over the first half of next year as we expect demand to drop, and the spare capacity that we brought on stream in the second half of this year is proven to be not required.
Can you address President Trump?
Well, President Trump is the president of the largest consuming country of petroleum. 21 million, I believe, or thereabouts. That's 20% of global markets, if not more. And the consumer in the U.S., just like the consumer in France, just like the consumer in India, just like the consumer in Saudi Arabia, wants affordable energy. So he has every right to wish for affordability of energy for the citizens of the United States. and he is very vocal, using his favorite communication tool, which is Twitter, and we hear him and we take his views seriously.
There you have it, guys. The Saudi energy minister really being very measured, as always, in his comments there about not just what they're trying to achieve here at Vienna, but also, of course, about President Trump. I described this earlier as somewhat like OPEC is a ship trying to navigate a course on very, very rough seas, and they are buffeted, as we know, between these two leaders, President Donald Trump and Vladimir Putin as well. And the needs and the achievements of both are going to be very much tied to what we see coming out of this meeting in terms of the energy prices and that sort of energy dynamic when it comes to the voters as well, because you have to remember that this is something that is going to play out in the next election cycle for the president, and it's something that we're going to continue to watch as we sit here later, hoping to hear more from the Russians.
All right, here's that big CNBC TV 18 exclusive that we've been tracking all day today. Warren Buffett's Berkshire Hathaway could be eyeing a 10% stake in Kotak Mahindra Bank. Now, sources have told CNBC TV 18 that Buffett's company could be planning to invest $4 to $6 billion in Kotak Bank. Just recently, Berkshire had invested $300 million into Paytm. Do remember, Uday Kotak has to bring his stake down to 20% in the bank by the end of this year to comply with RBI norms, and currently he holds about 30%. So this deal could just be the answer that Kotak Mahindra Bank has been looking for. Nimesh Shah, who broke that big story, is here with the exclusive details. Nimesh, take us through what you've picked up so far and what has Kotak Mahindra Bank's response been?
Sorry, this is what I've been saying since morning, that this is source-based information that I've picked up from my sources, that Warren Buffett's Berkshire Hathaway may look to buy, or maybe they're looking at or exploring options of buying at least 10% stake in Kotak Mahindra Bank. There are two options on the table, is what I understand in terms of this deal size. So one could be that Berkshire Hathaway buys out 10% of Uday Kotak's stake, which he anyway needs to bring down from 30% to 20% and take that 10% stake. The other option is that Berkshire Hathaway may subscribe to preferential issues from Kotak Mahindra Bank. In that case, there will be a fresh issue of shares, and the money will come into the bank, which could be used for inorganic growth or for growth opportunities. So these are two options which I'm told by my sources that it's been explored at this point in time, and there could be a deal in the offering in the days to come. So this is something which I've been highlighting since morning, that it's source-based information. We have an official comment from Kotak Mahindra Bank. So now the official comment from the bank to the exchanges is that they are not aware of any plans of Berkshire Hathaway buying any stake in the bank, as we reported. But there is no official comment or a response from Berkshire Hathaway yet. We've been chasing them for an official word. I've been trying to reach out to them either via email or on phone, but there's no response yet. So this is no confirmation yet from either of the sides. No denial is yet. But yeah, as things stand, Kotak Mahindra Bank has said that they are not aware of any such plans of Berkshire Hathaway, whereas Berkshire Hathaway has not communicated to us to our query yet. The other thing which I'm told is in the fray is that the existing shareholders, the large FI shareholders of Kotak Mahindra Bank, are actually looking at taking permissions from their individual boards to increase the stake in bank in case there is a very large block coming in by the end of the year from Uday Kotak. So that's a second possibility, that some of the larger existing FI shareholders may look to increase stake in case if there is a big block in offer from Uday Kotak in Kotak Mahindra Bank. So these are the two possibilities that I've been picking up from my sources. As I said, purely source-based information. Officially, I read out what Kotak Mahindra Bank said, and there is no communication from Berkshire Hathaway yet. The other thing, technical point, which I wanted to highlight, Ritu, is if you look at the May 2016 RBI circular, it very clearly says that any large regulated entity, foreign entity, can actually buy up to 40% stake in private bank in India. So 10% or 15% is not something which will go against the rule of the game or against RBI policy. So clearly, from a regulatory point of view, it's quite possible. If you connect the dots, looking at Uday Kotak looking to dilute stake, plus the fact that he's looking for a large buyer, this is possibly a deal which is in the making. But as things stand, this is just source-based. Officially, Kotak Mahindra Bank says they are not aware, and no word yet from Berkshire Hathaway's office.
Well, just a word in, Nimesh. Even before the ING Kotak deal was announced, even hours before that, Kotak Mahindra had officially said that there were no comments to offer. So let's take that with a pinch of salt. But big story coming in from the deal space. It'll be a big deal in the banks to watch out for. But more than from the M&A space, HCL Tech has signed a deal to acquire 7 IBM software products for $1.8 billion. Now, this deal will be funded largely through internal accruals and is expected to be completed by 2019. This is the largest acquisition by any Indian IT services provider till date. However, it failed to enthuse the investors. This as analysts have expressed concerns over the huge payout by HCL Tech. Kritika Saxena caught up with the management of the company, with the CFO specifically, Prateek Agarwal, who elaborated on the specifics of this deal. Listen in.
Prateek, a quick question to you with respect to the payment and the payout of the deal. So it's $1.8 billion. I saw the details of your release, 1.7 billion roughly in cash and $300 million in debt. Can you clarify if this is correct? And can you give us some more details with respect to if it's a cash consideration, if there's a share swap involved in this as well?
So, Kritika, this is a pure cash deal.
Okay.
The total number, including earnouts, is 1,775.
Okay.
Which we are just rounding off to 1.8 billion.
Okay.
Roughly about half of it, about 48% of it, is to be paid at close, which we expect to be by middle of calendar 2019. And the balance half, most of the balance half would be paid after end of 1 year after close.
Okay.
Most of this $1,775 million is going to be internal accruals, financed by internal accruals, except a small amount of about 300 million, which we might raise at close, because some of our funds are locked up in FDs and long-term bonds, etc. That's the only reason why we are raising it. Otherwise, we expect to be cash positive going forward as well.
Okay, so just to clarify, so the $300 million debt you will take at close if required. That may not be a requirement as well if the capital comes in by that point. So that's basically mid-2019 when that debt will be taken, correct?
That's right. It also depends on when we get all the approvals, etc., which is an external factor we can't accurately predict. So depending on the date, we might have to take, or if it gets delayed, we may not need it.
All right, here's the big development from the divestment corner then. The government will knock on market regulator SEBI's door in order to seek an exemption from the open offer that is expected to be triggered on the back of the PFC-REC deal. Now, this comes less than 24 hours after the cabinet decided to sell government stake in the state-run Rural Electrification Corporation to another state-run company, that is Power Finance Corporation. Sapna Das, who has been tracking that story very, very closely and broke this one, joins in with the latest. Sapna, what is the government's rationale?
Well, basically, this is a friendly takeover, and looking at those kind of guidelines, there is a possibility that basically a takeover offer may not be required at all. So, to that extent, it's highly possible that an exemption will be sought from the market regulator SEBI. That's one. Second, we are also given to understand that this entire process will now move forward, obviously. So, the likelihood of the appointment of the valuer is also possible over the next 1 month or so, and also because REC, PFC both are in the NBFC category, so the Reserve Bank of India's nod will also be required for this deal to actually go through. In terms of the transaction advisor, that has already been appointed, ICICI Securities, and we are also given to understand now that JS Sagar and Associates, they are the legal advisors for this entire deal. Having said all of this, we are also given to understand that the TA and the legal advisors that have been appointed so far, they have basically been done for possible 2 mergers in the power sector. So one is of course the PFC REC deal going through. The other that is on parallelly, probably some thought process is still on that, and hopefully that process should kickstart in the current fiscal itself. Is NTPC buying over government equity in SJVN? So that's somewhere around 63 to 64 odd %. It's very well known that Himachal Pradesh government has raised certain objections. So this is now a matter between the centre and the particular state. Talks are still on, but government is not giving up its hope of the stake sale going through sometime in the current fiscal itself. So for both these deals, we are given to understand that TA and the legal advisor will possibly be the same. Apart from this, given the fact, the size of REC and PFC, it's very likely that the government will also look forward to a kind of a control premium. So whatever numbers that come through at the time of the AM meeting when the share price is actually decided in terms of the actual transfer, so at that point in time, this control premium will have to also be considered.
All right, Sapna, thank you very much for bringing us that report. But on that note, we'll slip into a very short break on the show. But coming up on the other side, voting is underway in Rajasthan and Telangana.